Hey everyone, welcome back to the channel. In today's video, I'm going to break down what an inverse fair value gap actually is, how and where to use it, and I'll also give you a step-by-step process to pick the correct ones so you don't miss any opportunities or untapped orders. Alright, let's dive straight into it. So first, what exactly is an inverse fair value gap, or IFVG? It's basically a normal fair value gap that has been invalidated or run through by opposite direction candles. Pretty simple, but super powerful once you understand how to use it properly. Now let's start with a bearish inverse fair value gap. A bearish IFVG is formed when a bullish fair value gap gets invalidated after a buy-side liquidity sweep. Once that happens, the market usually retraces back into that inverse fair value gap and then continues to the opposing side liquidity. Let's look at this example. We have a buy-side liquidity sweep, then the market invalidates the bullish fair value gap, retraces back to that inverse fair value gap, and from there moves straight to the sell side liquidity. Now let's flip it. A bullish inverse fair value gap forms when a bearish fair value gap gets invalidated after a sell-side liquidity sweep. Again, the market retraces back into that area and then runs straight toward the opposing side liquidity. But here's where most traders struggle. Sometimes you pick an inverse fair value gap, but the market doesn't retrace back at all. It just goes directly to your target. Sounds familiar, right? Don't worry, I'll give you a simple framework to fix this issue and help you choose higher probability setups. So, let's hop straight into the charts and look at some real examples. So, moving on to the chart, we can see a buy-side liquidity sweep right here. Now, let's drop down to the 1-minute time and look for an inverse fair value gap forming in this area. This is where we'll start planning our entry. So pay close attention to how price reacts around it. Alright, now we've got an inverse fair value gap forming here. We're going to enter short right at this IFVG, place our stop loss above the previous high, and target the 15-minute sell side liquidity. Simple and clean setup, following pure price action logic. Now let's see what happens next. Here, the market triggers our order and starts moving to the downside. It pulls back one more time and then goes straight to our target. Beautiful move. Alright, let's jump into another example and see how it plays out there. Alright, now we're going to mark out our 15-minute liquidity levels. Once that's done, we'll shift down to the 1-minute time frame and wait for the market to take out one of our liquidity levels. This is where we get ready to look for a precise entry setup. Now, the market has taken out our sell-side liquidity and we have a clean inverse fair value gap forming. First, we'll check if it lies in a premium or discount range, and yes, it's in premium. Next, we'll mark our inverse fair value gap and enter long on this gap, place our stop loss below the recent low, and target the recent high. The market triggers our order instantly, then starts moving upside, giving us a clean target. Perfect execution. Alright, let's move on to the next example and see how it plays out. Alright, now we have a sell-side liquidity sweep. We'll switch down to the 1-minute time frame and look for an inverse fair value gap. There it is, a clean inverse fair value gap. We'll mark this gap and enter long, place our stop loss at the recent lows, and target the buy-side liquidity. Once again, the market triggers our order and moves straight to our target. Perfect execution. Now, let's move on to the last example. Alright, now we have a buy-side liquidity sweep. Once again, we'll shift down to the 1-minute time frame and look for an inverse fair value gap, IFVG. Here it is, a clean IFVG. We'll enter short on this gap, place our stop loss at the recent high, and target the sell-side liquidity. As you can see, the market taps our order and moves straight to our target. Perfect execution. I hope I've explained this clearly enough for you to understand. If you're still struggling to use inverse fair value gaps, make sure to check out my earlier videos on order blocks and breakers. And if you want to learn more with me, you can join my Telegram and Discord server. You'll also get the PDF there. I hope this helps you improve your trading and take your setups to the next level.